Costco sells a hot dog and a soda for $1.50. It's cost the same since the 1980s, while every other price on earth has doubled or tripled. Costco actually loses money on that hot dog on purpose, and they sell a whole warehouse full of things at prices so low they barely make a cent on any of them. So how is Costco one of the most successful, profitable retailers in the world while selling everything at almost no markup? Because Costco's real profit doesn't come from selling you products at all. The products are the bait. The actual money comes from something you pay before you even walk in the door, and most shoppers never think about it as the point. Here's why this matters beyond the fun of it. If you can't explain how a company actually makes its money, you can't intelligently invest in it. And Costco is the perfect example of a business whose real engine is completely hidden behind the thing everyone thinks it does. Today I'll show you how Costco really makes money, why the cheap hot dog is a genius strategy and not a mistake, and how seeing through it teaches you the first real skill of investing. Understand the business before you ever buy it. Let's get into it. I'm Mr. Finance, and this is our series where we crack open famous companies to find how they actually make money, because that's the exact skill smart investing is built on. If that's your kind of thing, subscribing takes one tap. Now, let's follow the money. Let's start with what everyone sees: a giant warehouse selling everything from groceries to televisions at shockingly low prices. And the low prices aren't a marketing gimmick. They're real, and they're the whole strategy. Most stores mark up their products significantly. That markup is how a normal retailer makes its profit. Costco deliberately refuses to do that. It caps its markup on products at a very low level, far lower than typical retailers, and passes the savings to you. On the actual sale of goods, Costco makes almost no profit, sometimes barely breaking even after all the costs of running enormous warehouses. By the normal logic of retail, this looks insane. You don't get rich selling things for almost no profit, and the hot dog is the extreme version of this. The famous $1.50 hot dog combo genuinely loses money. Costco eats the cost. The company's leadership has reportedly insisted the price stay at $1.50 essentially forever, refusing to raise it even as costs rose. From a pure per-item view, that's a money-losing product they protect on purpose. Why would any sane business do that? Because Costco isn't trying to make money on the hot dog, or the groceries, or the TV. Those low prices and that loss leader hot dog are doing a completely different job. They're not the source of profit, they're the lure. To see the real engine, you have to look at what you did before you ever picked up a single item. And once you see it, the whole strategy flips from insane to genius. Here's the real engine: the membership fee. You cannot shop at Costco unless you pay an annual fee just to walk through the door. And that fee, paid by tens of millions of members every single year, is where Costco's actual profit comes from. Think about what makes that fee so powerful. It's almost pure profit. When you pay your annual membership, Costco doesn't have to ship you anything, manufacture anything, or stock a shelf for it. It's money paid simply for the right to shop, and the overwhelming majority of that fee flows straight to the bottom line. In fact, Costco's yearly membership fees add up to a sum that rivals or exceeds the profit it makes on all its actual merchandise combined. Read that again. The fee to enter, not the mountain of goods inside, is the real profit center. Now, the cheap hot dog strategy suddenly makes perfect sense. Costco isn't a store trying to profit on products. It's a membership club that uses unbeatable prices to make the membership worth buying and renewing. The loss leader hot dog, the rock-bottom prices, the treasure hunt bargains, all of it exists to make you feel your membership is a steal, so you pay it again next year. They lose a little on the hot dog to protect the thing that actually prints money: your renewal. And it works spectacularly because of one number that investors love: the renewal rate. The vast majority of Costco members renew their membership year after year, a remarkably loyal, sticky base. That means the profit engine is not just large, it's predictable. Costco can count on that fee income arriving again and again, like clockwork, from members who feel they'd be foolish to give up such good prices. Cheap goods in the front, a loyal, recurring, high-profit membership machine humming quietly in the back. Let's appreciate just how clever the loss leader move really is, because it's a masterclass in business thinking. The $1.50 hot dog and the low prices do three jobs at once. First, they justify the membership. You feel the fee pays for itself in savings, so you renew. Second, they build fierce goodwill and word of mouth. The hot dog is legendary, a symbol that Costco is on your side, which is priceless marketing that costs them pocket change. And third, those irresistible prices pull you into the warehouse, where the deliberately treasure hunt layout leads you past pallets of things you didn't plan to buy. You came for the cheap essentials. You leave with a giant cart. Costco makes little on each of those items, but the volume is astronomical, and every trip reinforces why the membership is worth keeping. Beyond membership, Costco has a few other quiet money streams worth seeing. It sells its own in-house brand, which earns a bit more margin than name brands, while still feeling like a bargain to you. It sells services, things like credit card partnerships, travel, and more, to its trusted members. And its sheer buying power lets it squeeze suppliers for the lowest possible costs, protecting even its razor-thin product margins. But make no mistake, these are side dishes. The membership fee is the main course, and everything else on the menu exists to keep members happy enough to renew it. So the pattern here is the same one great businesses keep using. Find a way to earn recurring money from loyal customers, and use everything else, even a money-losing hot dog, to protect that recurring stream. Costco figured out that the most valuable thing isn't a sale, it's a membership that renews forever. Here's why we did all this, and it's the whole point of the series. What you just learned about Costco is exactly the thinking that separates smart investors from people who gamble on names they recognize. Most people would look at Costco and think it's a store that sells cheap stuff in bulk. If they invested, they'd be betting on that surface story. But a real investor looks deeper and sees the truth. Costco is a membership business with a stunningly loyal, recurring customer base that happens to use a low-margin store as the lure. That's a completely different and much stronger thing to own than a discount store. The predictable, high-margin, renewing fee income is why the business is so durable. You could only know that by asking the key question, where does the profit actually come from? This is the transferable skill. Don't judge a company by what it sells, judge it by how it profits. Before putting $1 into any business, you should be able to explain its real money engine in a sentence. For Costco, a loyal membership club that uses unbeatable prices as bait. If you can't find the engine, you don't understand the company well enough to invest in it. You'd just be buying a logo you like. And the essential honesty anchor. None of this is a recommendation to buy Costco or any stock. Understanding the business is step one, not the whole job. A wonderful company can still be a bad investment if the price you pay is too high, and competition and risk always matter. What I'm handing you is the lens, not a tip. For most people, owning the whole market through a low-cost index fund is still the wiser path than betting on single companies. But whether you buy one stock or 1,000 through a fund, training yourself to ask, how does this actually make money, and does that engine last, will make you a sharper, harder-to-fool investor for life. Costco just taught us the lesson with a hot dog. There's one more layer worth seeing, because it reveals why this business is so hard to attack. And how hard is it to attack is one of the most important questions an investor can ask about any company. Because Costco makes its profit from membership fees, it can afford to sell products at prices its competitors literally cannot match. A normal retailer needs the profit on the products to survive, so it can't drop prices to Costco's level without bleeding. Costco doesn't need product profit, the membership covers it, so it can keep prices brutally low, which pulls in more members, which funds even lower prices. It's a self-reinforcing loop that competitors can't easily copy without blowing up their own business model. Investors call this kind of durable advantage a moat, something that protects a company from competition over the long term. Costco's moat is its membership model, plus its enormous scale and loyalty. The low prices attract members, the members fund the low prices, and the loyalty makes the whole thing predictable and hard to disrupt. That's a rare and powerful structure, and it's exactly the kind of thing a thoughtful investor looks for, Not just, is this a good company today, but is this advantage defensible for decades? So Costco teaches two lessons in one. First, find the real profit engine, the membership, not the merchandise. Second, ask whether that engine is protected, and Costco's is protected by a moat competitors can't cross without self-destructing. See both of those in a business, and you're no longer shopping, you're analyzing. That shift, from admiring a company to understanding it, is the entire foundation of investing well. And notice how the moat and the engine reinforce each other, because that's the real magic. The membership fee lets Costco price low. The low prices win loyal members. The loyal members renew and fund the next round of low prices. Each part feeds the next in a loop that gets stronger over time and harder to attack. When you can spot a business where the money engine and the competitive advantage strengthen each other like that, you've found something genuinely rare. And you've learned to see it not by shopping there, but by asking the two questions this hot dog just taught you. So, how does Costco really make money? Not from the products, which it sells at almost no profit, and not from the hot dog, which it loses money on by design. The real profit comes from the annual membership fee, near pure, predictable, and renewed year after year by a fiercely loyal base. The cheap prices are the bait that keeps members paying, and those same low prices form a moat competitors can't cross. And the real takeaway isn't about Costco, it's the lens. Find a company's true profit engine, then ask whether it's protected. See the engine and the moat, not just the storefront, and you're thinking like an investor. You'll never look at that $1.50 hot dog the same way again, because now you know it's not a bargain they can't afford to end. It's the cheapest, smartest marketing on earth, protecting a membership machine that quietly prints money. The thing everyone sees was never where the money was. And that gap between the obvious story and the real one is exactly where good investing begins. I won't pretend understanding one company makes you ready to pick stocks. It doesn't, and for most people, a simple index fund is still the wiser path. But the skill you just practiced, finding the real engine and asking whether it's defensible, is one you'll use for the rest of your life. I'm Mr. Finance. Subscribe if you want more of this. Companies cracked open, the real engine revealed, and the investing lesson underneath. No hype. And tell me in the comments, which company should I break open next? Whose money engine do you think would surprise people the most? I read every single one.